Ladies and gentlemen, we are back again, and this time we have an all-exciting panel featuring uh, the CEO of CompuLynx, Sailesh Savani, James Gachi, the Senior Sales Manager for Software as a Services with InfoBip, and we've got Mr. Vincent Vimal Raj from Freshworks, the Senior Business Development Manager. From this afternoon, Mr. Jay Kothari as the moderator. Sir, over to you in leading this panel, which is the CX panel. We've heard something about customer convenience. We're going to hear more about it. The panels are going to talk about creating convenience, reimagining long transformation. Over to you, Jay.
Wonderful. Thank you so much, Fahad, again. Good afternoon, everyone. As Fahad mentioned, my name is Jay Kothari, and indeed, it's my pleasure again to be hosting and moderating this afternoon session. But more importantly, with an amazing panel this afternoon of industry experts, we'll be looking at how we can reimagine the long-term transformation whilst focusing on customer experience. Now, the COVID-19 pandemic has generated a new normal for almost every aspect of our lives, from how we work to how we socialize. Once COVID-19 is under control, there are some elements that will most likely return to the old normal. Let's hope socializing is one of them. While others, like our purchasing habits, might persist in the newly developed form and continue to evolve. As this new customer behavior solidify, companies will need to adapt to either meet or to exceed the fundamentally different customer expectation. They'll need to deliver great customer experience to the new customer, or how I'd like to put it, the new normal customer. So let's dive in and look at how and learn from the panelists here on how we can ensure the best customer experience from the front end, but also more importantly from the back end. The first on my panel I have here is Mr. Sailesh Savani, who is the founder and CEO of Copylex. So Sailesh, why do you think focusing on customer experience is even more important now for the banking and financial industry during this COVID period and beyond?
Yeah, I think this is a very interesting topic, Jay, and thank you all for having me on this panel. I'm super excited. This subject is very, very close to my heart. So customer experience is, it's a buzzword that's being overused across all verticals, retail and banking and other verticals. But I guess particularly in the banking vertical, where in this COVID period and beyond, a lot of banks are really looking at enhancing their customer experience, primarily because with the advent of COVID and the increase in the requirement for social distancing, customers are not visiting banking halls. Customers are trying to keep away from physical channels and are continuing to embrace our digital channels, and therefore, for a customer to have that seamless experience, which could be same if not similar as he or she is in the banking hall talking to a teller or talking to an agent, is very, very critical, because today's customer is impatient. He is pretty well educated, very well aware, and it's important for banks to recognize that and to make sure that the journey for the customer across all channels remains seamless, remains the same, if not similar, across all channels, so that the customer is able to transact with the bank seamlessly and without having to say, oh, I would rather go to the branch. I was better off going to a branch, or I was better off talking to a teller, or I was better off talking to an agent on the phone. So that's where the investment is going to happen. One of my colleagues presented earlier today, more than 50% of banks are looking at enhancing their customer experience across all channels as one of the top 3 priorities for 2021. Now that says a lot. That says a lot for the industry, because this is a CXO conversation. This is a boardroom conversation in banks, that all our channels need to be giving that seamless experience to our. What are we doing? What are technologies that we are embracing? What best practices are we considering to be able to deliver that omni-channel experience to our customers? Because otherwise there will be churn. There is a lot of competition in the banking sector, so is in every other vertical, and therefore banks are really making it an important agenda for themselves to enhance the customer experience, so that one, they will be able to retain their customers, two, they will be able to delight their existing customers, and three, penetrate a larger market, acquire newer customers, acquire more customers from their competitors who are not paying equal attention to the customer experience agenda.
Absolutely, Sailesh. I think you've really pointed out the three key elements there. And one of them is obviously the competition among the industry, and of course, vertically across all industries. But more so importantly now, the new generation has created this middle class that are previously the unbanked, and some of them illiteracy. Now, those is where they're coming back into the banking industry, and COVID-19 has forced them into the digital world. So this experience now is clearly making an impact onto where they choose to bank. And absolutely. So thanks for really pointing out that. My next question to you, though, is a lot of the banks are, acquiring and implementing the biometric technology. I know Copylex works quite closely on that technology front. But what most industries, SMEs, banks don't really understand is, how does the biometric technology help with the bottom line?
So, see, basically, there is a huge regulatory push for KYC and what is now being called eKYC. And that is coming from a space of fraudulent activities and a lot of money laundering stuff going on through the banking channels. And therefore, there is a humongous amount of push from the regulators to make sure that the banks are very strict about knowing their customers, having accurate details about their customers, and making sure that the banks are putting in place processes and technologies and elements in their KYC journey to make sure that they understand their customers better. They have a very clear understanding of who the customer is, and also there are no duplicates in their customer account information. So I could go into a bank and say that my name is John, and I could open an account, and then I could have a fake ID and go into the same bank, and open up another account saying my name is Joseph, and that is possible without having a biometric element in the KYC process. So as a result, there is an exposure for the banks to frauds and to customers who can probably take loans from the banks and defraud, and delinquencies go up as a result. There will be what banks call NPAs at the end of every year, non-performing assets, non-performing loans, and therefore, if banks are looking at biometric technology as part of the eKYC process, it'll ensure that the delinquencies are reduced to a minimum, as well as also eliminating all frauds that are happening as a result of identity theft. There's a humongous amount of identity theft going on in financial transactions, be it in the physical banking channels or the digital banking channels. And all that can be combated so easily and so seamlessly with use of biometric technology. So we've been working with the larger retail banks in the region, and we are the largest provider of biometric technology for the eKYC process for banks, and we've got over 15 million biometric credentials on our platform, and banks are continuing to leverage this. And with the advent of COVID, physical biometric has posed its own challenges. So banks are seriously looking at other modalities of biometric technology, be it face or voice or iris. And as a result, that is now enabling banks to deploy uh, a more secure KYC process and a more secure transaction process for their customers who are transacting with the bank remotely. And with the face biometric technology as well as voice biometric technology, banks are now able to deploy that because these technologies are device agnostic. So you don't need a specific device to read the face of a customer. Of course, it requires a minimum megapixel camera, but beyond that, this technology is completely device agnostic as compared to fingerprint biometric, whereby the fingerprint readers on every mobile device are different. And the way mobile devices treat, read, and store and process biometric images of fingerprints is different across mobile devices. So that definitely is a challenge in itself. But with face and voice, banks can leverage the real fact about these technologies being completely device agnostic. So clearly, Jay, to answer your question, with biometric, there is a clear benefit to the bottom line. With reduced NPAs, with reduced frauds, and reduced claims from customers, oh, I didn't do this transaction, oh, I didn't withdraw this, oh, this credit card transaction was not my transaction. So all this is definitely adding up to the bottom line, which is really depleting for the banks, because their first and the most important revenue stream of interest is being capped by regulators in several countries in Africa, like Kenya. We have an interest rate cap. So there is only so much can a bank make out of their mainstream income, which is interest. So they have to look at other avenues of either making more money or saving costs and out of frauds and other activities.
Perfect. No, I think, Sailesh, you've precisely highlighted and given the insights and really very well summarized why and how this technology is so important and how it benefits the company. Folks, just let you know, if you have any questions, please go to your right-hand side, the questions tab, type your questions out. And if you have any particular questions to a particular panelist, please type in their names. We'll be answering your questions shortly after we just get through all of our panelists. Right, next on my panel list here, I've got Mr. James Gashi, who is the regional head for sales for Infobip. Welcome, Mr. James.
Thank you so much, Jay.
Wonderful. James, so automation is obviously a very hot topic out there today, right?
Right. Yeah.
Why do you think we need to balance automation with this human touch? How do we not forget the human touch while we're doing this with automation?
So one of the dangers of fully automating processes, especially in the banking and financial services industry, is you risk losing the elements of humanizing customer interactions. Now, when we talk about automation and AI to be specific, AI can only do so much. So there is that need to couple a little bit of AI and a little bit of human intervention for you to be able to provide better customer experience. Now, the thing about this, if you look at the banking and financial services industry, and it's quite an industry where we see very little product differentiation. And within an age where we are seeing customers more and more are rewarding customer experience and not product differentiation. If you are sitting on this call and you're a banker, you probably are wondering, how do I differentiate myself? Because I can't differentiate myself on product. Every competitor in the market is offering the same savings account and current account and investment products that I am offering. So the only way to differentiate myself is on customer experience. Now, you have 500,000 customers or 1 million customers, 5 million, 25 million, 30 million customers. How do you offer that kind of experience across the whole digital channel and make sure that it is seamless and it is replicated, whether it's on branch or it's on the digital channel? So you probably are considering automation. And one of the things you could probably be considering is offering an AI-driven chatbot that can respond to customer queries, or even an AI-driven bot that you can provide banking services on. And we have seen these in the market, particularly in the West, Kenya and South Africa. But even as you provide this kind of an AI bot, whether it is on a ubiquitous channel like SMS, or even on a chat application like WhatsApp, and you have seen some of these solutions in markets, how do you then ensure that even though you have these AI-driven bots, that still has some underlying data that has trained it, and the data could be absolutely biased? How do you ensure that at any given point in the customer journey, then a customer can request for human intervention seamlessly on the same channel? So you probably might want to consider something like a smart-driven omni-channel contact center, because broadly, customer expectations are that we want to chat with our banks the same way we chat with our family, whether that is on WhatsApp, whether that is on Telegram. And so, Jay, it becomes a question of balancing skill and scale. Skill on one hand, because you really want to train your underlying AI-driven platform with correct data that reduces bias, but also gives you the skill to serve your 15, 10 million, 5 million customers, right? But you also want to provide the skill set to your contact care agents so that they are able to also respond to these questions coming from our customers along the whole customer journey. And the way to do that, like I mentioned, is you want to empower them with something like a smart-driven omni-channel contact center that kind of gives you the ability to provide context by taking over from where the bot interaction with the customer ended and then proceed with the human interaction. But by and large, it's not all processes that can be put on an automated platform, like an AI-driven chatbot. If we are talking about KYC requirements, if you are talking about credit scoring decisions, or if you're talking about lending decisions. So the underlying, and I have mentioned this, the underlying data that is being used to train these AI-driven bots could be largely biased, and you have seen this in the market. Now, data coming from the market, especially about mobile lending applications, we are seeing data suggests that it's quite biased against women because the underlying data was biased. So how do you reduce that bias? That bias, you reduce it by having human intervention along the customer journey. And the two things that I see in the market that can drive these largely is an AI-driven bot on whatever channel you prefer. Of course, talking about something like WhatsApp is quite ubiquitous in the market. And then you pair that with a smart-driven omni-channel contact center to ensure that the interaction is quite seamless.
Certainly. So and I quite like that point you picked out here, that we need to really balance the skill versus that scale, and then how we elaborated on that point. Now, on the very same note, there's this fine balance between keeping it simple, yet balancing security, privacy, and convenience.
Yes.
What are your thoughts on that?
So let me say this from the outset, that there is no reason why convenience in terms of customer experience across the digital channel and security and privacy should not exist. So if you're a banker, you do not have to pick one over the other. So these two can coexist together. Now, one of the things that banks will have to consider in the post-pandemic period is how do you build security within customer experience? And especially broadly given that customers are now dumping the branch and preferring the digital channels, whichever digital channel that you're offering. It could be a mobile banking application or internet banking or a USSD-driven banking application. But let's remember something, Jay. So what the growth of the digital channel portends for banks is that it is creating a very big field for malicious actors to play on, right? So on one hand, you have the customer expectations who are telling you, we need to move to a digital channel. On the other hand, you have malicious actors who are waiting to get in, whether this is fraud and everything that you can think of. So how then do you balance those two? Now, banks, and largely any other enterprises, which is able to balance security and customer experience is going to reap the rewards in the long term. And don't forget, even as we talk about security and customer experience, there's also the question of privacy, which is coming from the regulators, whether that is GDPR if you are in the European Union, or it's the Data Protection Act of 2019-2020 if you're in Kenya. So how do you balance all these competing interests? Now, if you look at something like KYC requirements, how, for instance, do you complete KYC requirements on a digital channel? You're probably going to need video, like Sailesh mentioned. You're probably going to need biometrics. You're probably going to need something like facial recognition. And these are technologies that we have in the market. But as a player, you have to first consider what is the cost of adoption of these technologies, right? Something like video, very easy to adopt, very easy to integrate, and will solve a huge problem when it comes to authenticating customers, right? So all these competing interests, and like I mentioned, more important is that you don't have to choose one over the other. Security and better customer experience on the digital channel can coexist. You just need to find the right balance and the right people to work with to help you with this.
Perfect. Thank you so much, James. That's very well answered. Folks, keep your questions coming, unless this panel here is doing an amazing job answering all your questions. So keep those questions coming. Over to you now, Winston. Winston Vimalraj. Winston's the Senior Business Development Manager for Freshworks. Welcome, Winston.
Thank you very much. It's my pleasure, Jay.
Wonderful. So my question to you here is, and I'm guessing I'll speak here for a lot of the audience here. A lot of the organizations are saying, well, let's invest in technology. Let's put our efforts towards modernization, towards making it digital. Yet, investing in technology is very heavily capital funded. But I bet that you disagree, where as much as it's an investment, it also really helps reducing your cost and enhance innovation. Give us your thoughts on how we can harness technology to reduce costs and enhance innovation.
Sure, absolutely. I think it's a very interesting question. So how does technology reduce costs and enhance innovation? Well, we all know the benefits of technology in business cannot be overemphasized. But how does it reduce cost? To put it simply, at a high level, technology increases productivity, speed, ease of sharing and storing information. All these benefits lead to a lower cost structure and an increase in revenue for businesses. Let's take an example. Let's take teleconferencing in times like COVID. Teleconferencing tools have made our lives easier. Instead of traveling to different locations for customer meetings or events, you can easily use it to communicate to your customers or to your employees across the world at the same time without having to leave the offices. So this helps us to save cost in travel, meals, lodgings, etc. The employees will still be in their office, which means you can speed up other activities like a product development cycle, deployment cycle for a particular project. It also helps to improve performance through frequent virtual meetings with customers or employees, with timely information. So it not only increases efficiency, but it also helps to manage business costs and continuity of business as well. So let's take automation. With the adoption of automation, employees spend less time on tasks that once required hours to complete. We save a lot of time there, and we all know time is money. This is important not just because automation can do some menial tasks in a fraction of time, but it also shrinks the chance of human error. Whether employees are rushed to do, rushed due to a large volume of work, or they just, make a simple data entry mistake. Automation takes that component out of picture. So technology reduces cost by reducing the amount of time spent on unnecessary tasks and shrinking the chance of human error and allowing more people to be involved in projects. Now, how does technology enhance innovation? Generally, innovation is understood as a successful introduction of a new thing or method. In the organizational context, innovation is linked to performance and growth through improvements, related to productivity, quality, competitive positioning, market share, etc. So technology helps organizations to improve their efficiency in materializing their innovative ideas, be it product related innovation, process related innovation, administrative innovation. All these types of innovations are related to execution of technology at different stages and in different ways. An ability of an user to innovate will improve as a result of improved quality of software or hardware, and access to tools and components for innovation. For example, technology played a great role in development of banking industry. Banks now have become global due to the innovation in technology. The banking services became available 24 hours every day for the whole year. If you look back earlier, a person had to wait for days and months to do a transaction in other countries. But now in new technology, it is very simple and fast to make a transaction in any part of the world within a fraction of a second. So I'd probably say, in today's world, innovation and technology should go in tandem with each other, and we definitely need disruptive technologies to give life to brilliant and innovative ideas.
Yeah, absolutely, Winston. I think, and you've really highlighted, besides the efficiencies that we've talked about, we can naturally save on cost, right? But what has shown in the recent times is how technology has ensured business continuity, right? Through COVID times, people who have invested in technology were able to operate, even be it remotely. Secondly, with banks, right? They were capable or given ability to operate in regions where in the past, traditionally, you'd have to open up physical banks. Now, with the newer technology, and the introduction and with innovative of the neobanks, now organizations can be remotely, based anywhere and yet operate in any part of the world. So certainly, not only that it has helped grow as an organization, but overall it has even brought down your cost of operations, because you may be not necessarily hiring the same amount of people as you would need for a physical bank. So I think you very well highlighted and it's shown where really technology is really helping boost innovation for the future, taking us for the future and helping us reduce the cost. Now, before we go ahead, I think that we just got about 9 minutes left. So what I'd like to do, let's dive into the questions, and so we can kind of take these topics a little bit more forward. So first question I'll have is for Mr. Sailesh, for yourself. We've got a quick question here. How do you quantify the ROI because of the CX? We can't hear you, Mr. Sailesh.
Sorry. Yeah, I think that's a very relevant question. And, we are always faced with this question by bankers that, look, you want us to invest this much. What is the ROI on this? And I mean, look, there is no simple answer to this, but there are simple things that can be quantified, that can be explained to bankers. So, for example, like you just said, Jay, right, that a lot of the banks are investing in CX, for example, making their mobile banking or internet banking more seamless. And as a result, banks are consolidating number of branches they have. And they're saying, look, either they're reducing number of tellers in the branch and agents in the branch, or they are actually consolidating branches. And that in itself is a humongous cost saving coupled with increased customer engagement. So that is one way I would say that you would be able to quantify that, look, I've invested so much in building my internet banking platform and my mobile banking platform so seamless that the customer does not need to call my call center or come to my branch or interact with an agent. He can do it seamlessly sitting in his workplace or in his area of comfort and continue to transact with the bank the way he was transacting as if he was in my banking hall. I hope that answers your question, Shimelis.
Right, and I think absolutely you did. I think there's no one simple way of quantifying the ROI, because it has such huge parameters that can go into it. But as an organization, we can all agree on certain parameters to check on, as you just rightfully highlighted. So thank you there. Next questions, I'll probably give it to you, James. How can we break down data silos?
I think this is one of the biggest challenges that I've seen in the market today, that we have all this data about customers that are existing in different silos. And so as a bank, it becomes quite hard to track what are the customer interactions that you're having, that customer is having with the bank. So whether you want to consider something like data warehousing to have what we call a single point of truth, create your customer profiles, whether it is on age, on geographical location, and all those parameters. Because what then that helps you to do is you can actually do a lot of micro-targeting, whether you are doing marketing campaigns or whether you are doing any sort of campaign as a bank. You can do a lot of targeting, because it doesn't make sense, for instance, today that my bank still sends me a message to tell me that I should go for breast cancer screening. But they know I'm probably male, and they probably send my wife a message telling her she should go for a different kind of a screening. So this is because different data is existing on Zero. So very important for you to have data warehouse, single point of truth, and that allows you to do a lot of super targeting when it comes to running customer interactions and customer campaigns. So I hope that answers you, Shimeli.
I think that answers the question perfectly. Winston, over to you. We got a question here from Leroy. He's asking, do you think banks and fintechs can ever coexist in the financial space without compromising on the customer experience and the value proposition? Winston?
Can you hear me? I'm sorry. I think I had.
Certainly can hear you now. Okay, I think Winston's probably having a bit of a network issue. Let's just look at the next questions while Winston comes back online. And let's see if one of you guys take this. So got again a question from Shimelis, who's asking, based on what parameters can a bank plan for budget? And I'm guessing in this question, he's implying to budget for the technology. So what parameters can we plan for the technology budget? Is it good to justify based on the percentage of revenue or business transactions? What do you think, Sailesh?
So, see, I think there are various ways of doing this, okay? But for example, I mean, one of the customers that we're dealing with, he said that, look, I want to invest in customer onboarding solution. So he says that, look, I want to save my cost of customer onboarding, my per customer cost by X%. So he says that, okay, if I am going to onboard 10,000 customers in this financial year, and I want to reduce my cost of onboarding every customer by, say, $5, it means that I am prepared to spend $50,000 on my customer onboarding technology. Okay, so that's one way one of our customers is looking at, and they're saying, for example, I want to save in terms of having physical tellers or physical branches. I want to take away X number of branches, and as a result, I'm going to save $500,000, and 20% of that I'm willing to invest in technologies that will enable me to create a customer experience that's going to be the same for my customers. So Shimelis, I mean, one way of doing it is, what are you willing to save? What are you willing to compromise in your current infrastructure and augment it with technology that will give the customer the same amount of experience, but also not compromise your business growth and will not see customer churn? I hope that gives you some sense of what you're looking for.
Great, thanks, Sailesh. I do have a lot of questions that I want to get answered. I'd love to learn a lot from you, but I think I'll just be fair and just ask James to answer Leroy's question, because obviously it's been pending out there. So what are your thoughts? Can they ever coexist in the same space, James?
Absolutely. I don't see the reason why not. Because, well, one of the things that I've seen in the market, and speaking broadly about the African context and Kenya in particular, is that a lot of these innovations are being driven through collaboration, whether that's established technology company, smaller fintech implementer, and the bank, right? So for instance, what we have done in the market is to introduce something we call the partnership program. And what we are doing is look for fintechs which are operating in the market, which have a direct relationship with some of these banks, and then we partner with them. We bring our global technology and global perspective, and then we have a local implementation perspective by partnering with the fintechs, and then we're taking this kind of a partnership or consortium, if you may, and then approaching banks to see what partnership we can. There are some very impressive results, whether it is on launching mobile money transfer or mobile banking of our WhatsApp chatbot that hasn't been done anywhere, I don't think anywhere in the African continent, launching that with a bank here, very successful use case. So absolutely, I see a lot of collaboration between established tech companies, fintech players, and even the banks without compromising, of course, on the user experience.
Certainly, thank you. James there.
So I just want to say something here. I just want to say something there, Jay. So it's basically, are you okay for me to just make a quick comment?
Yeah, absolutely. Absolutely.
Yeah, thank you. So, so Leroy, I think, this coexistence is in fact imperative. And, the core business of fintech companies is technology. The core business of banks is money and banking. So for a fintech company, they will continue to invest in upgrading the technology and bringing in global best practices so that they are able to increase their market share and widen their market reach. So and so it is. I think it's a no-brainer. They have to coexist, and they will continue to coexist.
Great. Thank you, Sailesh. And I'd love to carry on this conversation. I'm really enjoying this. There's a lot of insights, but I'm guessing also Fahad's here, and he's going to let us know that the next session is ready. So with that, I really thank Sailesh, James, and Winston, who were fortunate to drop out. It was an amazing session. I think I learned lots. I'm sure the panel, the audience here had really great insights. So I'd really like to thank you a lot from the bottom of my heart. Over to you, Fahad.
Thank you, Jay. Thank you, James. And thank you, Mr. Sailesh.